cash flow from operations sample question for the CMA. So let's take a look at a sample question here. We're trying to calculate the cash flow from operations. We're given this information. Amortization expense is $150,000. Cash dividends paid to common shareholders, $75,000. The net income is $1.5 million. We have work in process inventory increased over the prior year by $300,000. And we have this gain on sale of equipment of $50,000. So given this information, let's calculate that. First, let's look at the statement of cash flows. What are the sections? We have operating, investing, and financing activities, right? Each of these can generate cash flow or use cash flow. The way I like to think of it is starting with a new company, right? Brand new company, we need investors because we need money to start a company. So let's sell some stock, right? That's a cash inflow in the financing activities section on the bottom, right? Then what are we going to do with that money? We need to buy equipment and maybe buy a building. We need to invest that money to start the business, right? So that's negative cash flow in the investing section there. Then we open the doors, right? We have customers, we get revenue, we have expenses, we pay employees, buy inventory, etc. That's an operating activity. So let's go a little bit more in depth now on each of these. So the operating activity, the way we're going to calculate the cash flow here is we're going to start with the income statements, net income, and we'll adjust that to be cash flow because the net income has things in it that are not cash related. So for example, if we have depreciation, right, that's an accounting adjustment that reduces our net income, reduces our taxable income, but it's not actually cash outflow. When we bought the equipment, that was the cash inflow or the outflow. The depreciation is just an accounting adjustment to reduce the book value of the asset over time. So we're going to add back in depreciation. If we have increases in current assets, like we bought inventory, cash flow goes down. If we have increases in current liabilities, means maybe we had expenses that we didn't pay for yet, so we're going to add that back in here because we haven't actually paid those expenses yet. And then we have other activities that can affect that, which we'll talk about in this problem also. Investing activities, like we said before, that's mainly usually going to be negative because we're buying equipment and things like that. So usually you want to see that that's negative, that's healthy for the company because you're investing in the company. If we do sell old equipment, the sales price will be recorded here as a positive cash flow. And then in the financing section, like I said before, we can get cash by selling stock, we can issue bonds, take a bank loan, that's cash coming into the company. We can buy that stock back, right? We can pay the loan back, and we can pay dividends to investors. Those are all negative financing activities. So overall, of course, you want your cash flow to be positive when you add up these three sections of the company. This particular question is to do a small calculation on the operating activity section of the cash flow statement, which we're going to do. Now that other activity that I was talking about here is we have a gain on sale of equipment, right? And that gain is going to be the sales price minus the book value of the equipment. And gains are recorded in the net income. So we're going to end up having to subtract that out. So let's look back at our pieces and categorize them as operating, financing, or investing activities, right? We said amortization is operating, cash dividends as a financing activity, net income is operating activity, work in process inventory is operating because that's a current asset, and the gain on the sale of the equipment is an operating cash flow adjustment, right? The actual sales price of the equipment would go in as a positive cash flow under the investing section, but we're not given that information here, right? We're not told the sales price, we're told the gain, and the gain again is the sales price minus the book value, right? If we sell it for more than the book value, we have to record that gain so that we pay taxes on that gain, right? So our net income went up, but cash flow related to that is not necessarily $50,000 because we don't know the sales price. So we're going to subtract that out of the operating section. And again, the actual cash flow related to that sale would hit the investing section, but that's not the question we're being asked here. And we're not given enough information to calculate that. So for the operating section, and this is what makes this problem tricky, we're going to subtract that out. Yeah, so the answer to the question is going to be, what is the operating cash flow? It's the 1.5 million of net income plus the amortization of 150 minus the increase in inventory of 300,000 minus that gain on sale of $50,000 is $1.3 million. That's the answer. Now, if you want more information, right, we have a separate video on the gain on sale that goes in depth into that one. So I would check that out if you want to know more information on why that's, being subtracted out of the operating section.